Hmm. Everyone, good morning, guys. How are you all? Good morning, everyone. So, I hope you are all studying well, you are all doing well, your preparation is going well. So, I welcome you in today's session. My name is Afreen Asmat. I am your IEIFS and PPB educator in English medium. Good morning, everyone. Just please confirm once about the audio and video of the class. Is everything is working fine or not? Hello everyone, good morning. Good morning everyone, good morning guys. Just please confirm once about the audio and video of the class. Is everything is working fine? And we are starting today's session with the most important module of IEIFS, that is module D. See, module D is very important for all of you, and you all know that this module D, you will find most of the questions from here only. Okay, so I welcome you in today's session. So today is the revision session for module D. We have done A, B, and C, and now it's the turn for module D. Okay, everyone just please like and share the video, guys. Everyone just please starting liking and sharing the video. Okay, let's start the session and let's start with the very first question of the class. Okay, okay, so which of the following is not a segment of a financial market? You have to tell which of the following is not a segment of the financial market: agriculture, commodities market, credit market, money market, or insurance market. So the correct answer for this question is very easy. This is very easy. I'm starting with a very easy question. So which of the following is not a segment of the financial market? You have to select which of the following is not a segment of the financial market. See, financial market have different segments. For example, insurance market, debt market, commodities market, fund commodities market, money market, capital market, mutual fund market, derivative market, forex exchange market or forex market. These are all the part of the financial market. But if we talk about a agriculture commodities market is not a part of the financial market. So the correct answer for this question is A, because agriculture commodities market is not a part of the financial market. Okay, done. So there is a credit market, there is a money market, there is a debt market, there is a forex market, there is a derivative market, capital market, money market, insurance market, mutual fund market. These are the market in the financial market. Clear? Okay, done. Next, choose the correct statement about derivative. Now you have to choose the correct statement about derivative. You all know what is derivative. Now you have to choose the correct statement. First, the term derivative refers to a financial contract whose value is depending on an underlying assets, group of asset or benchmark. In India, different derivative instruments are permitted and regulated by SEBI only. So you have to select the correct answer. So the correct statement for this question is, everyone just please answer the question. It's very easy. It's very easy. So the correct answer for this question is, see, what are derivative? As you all know, derivative is a type of financial contract who doesn't have its own value. Derivatives is a financial contract, or you can say an agreement, which value or whose value is derived from the underlying assets that is attached to a derivative. So there are some specific underlying assets, for example, equity, or for example, shares, for example, golds, commodities. These are some of the type of the asset that are attached to a derivative, and derivatives on its own doesn't have its value. This is a financial instrument which derives its value from the fluctuation of the underlying assets values. Okay, so first statement is perfectly correct. Now the second statement says that in India, derivative markets are regulated by SEBI only. Actually, it is wrong. So in India, derivative markets are regulated by both Reserve Bank of India and Securities and Exchange Board of India. So there are certain segments of the derivative market which are regulated by RBI, there are some segments of the derivatives which are regulated by SEBI. So they are under the regulation of both the entities, RBI and SEBI. So second is wrong, because not only SEBI, they are regulated by RBI also. So the correct answer for this question is only one is the correct answer. Clear? Done? Yes or no? Everyone, just please comment yes or no. Okay, done, perfect, good. Next question is what? See, next question is what? State development loans are instrument in which of the following market? State development loans are the instrument of which of the following market? It is money market, it is credit market, it is debt market, it is derivative market. So which of the following has the instrument known as the what? Known as the state development loan. So the correct answer for this question, everyone please answer the question. Everyone just please answer the question. The correct answer for this question is the state development loans are instrument of which of the following market? State development loans. So the correct answer for this question is, everyone please answer the question, state development loans are the instrument of which of the following market? So the correct answer for this question is obviously debt market. So debt market means a market which provide a place for the debt instrument. State development loans is a type of debt instrument which are dealt in the debt market segment. Okay, so C is the correct answer. Next question is what? Which of the following is not considered a long-term receiving bill under regulatory debt entities regulation? So you have to check which of the following is not considered as a long-term receiving bill under regulatory debt regulation. Infrastructure bond, treasury bill, corporate bonds, or municipal bonds. So the correct answer for this question is, everyone, see, it's a very easy question. Regulatory debt entities, which of the following is not a long receiving bill under regulatory debt entities? So the correct answer for this question, see, infrastructure bonds, these are the bonds which are especially for the financing of the infrastructure, and you all know that infrastructure financing requires a long term investment. Okay, these are the long term bonds, infrastructure bond or corporate bonds or municipal bond. But when we talk about the treasury bills are the short term money market instrument. Treasury bills are offered in different maturities, for example, 91 days, 182 days, 364 days. So this is the maturity time period of the treasury bill, and it is the instrument of money market because it has the maximum maturity of 364 days. Now you understand that this have a maturity period of less than 1 year. That's why it is a short term debt entity. Okay, so we have to select which of the following is not a long term debt entity. Treasury bill. Clear? Done? Yes, definitely. Next question is what? See, treasury bill in India generally do not come under which of the following maturity period? Now, treasury bill generally doesn't come under which of the following maturity time period? So, as you all know, that treasury bill is a short-term instrument. Now, treasury bills are offered in certain maturities. So, in India, which of the following is not a maturity time period for treasury bill? That is 91 days, 182 days, 273 days, or 364 days. So the correct answer for this question is, everyone just please answer the question. Everyone, you can all answer this question easily. You can all answer this question easily. Yes, Anjana. Anjana, sorry, not Anjana. Chaudhary, Araina, yes, yes, Araina. It is 273 days. Yes. So maturity bills, they are offered in 91 days, 182 days, and 364 days, not 273 days. So the correct answer for this question is C. So the correct answer for this question is C. C is the correct answer. Clear? Done? Okay. Good. Next is what? Next question is, what is the minimum net worth required for a corporate to issue certificate of deposit? What is a minimum net worth required for a corporate to issue certificate of deposit? It is rupee 1 crore, 5 crore, 4 crore, or there is no minimum net worth required for the issue of the corporate for certificate. So the correct answer for this question is, so these are very important questions because these are the questions which are related with the financial market segments, and you all know that module D is one of the most important module of IEIFS. Okay, see, so the correct answer for this question is yes, obviously. See, there is no limit or no minimum net worth required for a corporate to issue the certificate of deposit. So there is no minimum net worth requirement in this condition. So obviously, the D is the correct answer. D is the correct answer. Clear? Okay, done. Good. Next question is what? What is the maximum tenure for long-term repos operation? LTRO. See, long-term repos operations. There is a term that is repo and reverse repo. And repo and reverse repo are launched by RBI for short-term meeting requirements for the different segment. But there recently, the in year 2020, the RBI introduced the long-term repos also. So long-term repos, the time period for the long-term repos are 1 year, 3 year, 5 year, or 10 years. So the correct answer for this is, it is the maximum tenure I am asking. The maximum tenure for long-term repos operation. The maximum tenure for long-term repos operation. See, for short-term repos, arrangement is of less than 1 year. So the maximum year for short tenure or short-term repos is 1 year, and the maximum tenure for long-term repo is 3 years. See, RBI introduced this new type of the monetary policy in year 2020 with a time period of 1 year to 3 year, because less than 1 year are covered under repo. So the correct answer for this question is 3 year. B is the correct answer. Okay, done. So B is the correct answer. Okay, good. Next question. Which of the following entities are not mandated to distribute a minimum 90% of their cash flow to investors for loan repayment? It is REIT, it is InvIT, it is NBFCs, or both REITs and InvITs. So the correct answer for this question is, everyone just please answer the question. Everyone just please answer the question. This is easy and you all can answer this question. See, REITs is what? Real estate investment trust, and you all know that real estate investment trust are the stock market listed instrument which allow the investor to invest in the real estate without actually buying it. Okay, so real estate investment trust. InvITs, that is infrastructure investment trust. That is also a segment where you can invest in the infrastructure investment trust. NBFCs, non-banking financial companies, you all know. So I have asked the question that which of the following entities are not mandatory? They have not the mandated regulation to distribute 90% of their cash flow for the to the investor for loan repayment. So the correct answer for this question is, everyone. So the correct answer for this question is, so, if we talk about the correct answer for this question is NBFCs, non-banking financial company. There is no such requirement for NBFCs, while REITs and InvITs, they both have to mandate a minimum of 90% of their cash flow to investors for the loan repayment. So, the correct answer is C, NBFCs, non-banking financial company. Next, what is the minimum amount of a stake that a sponsor should hold in InvIT? So, infrastructure investment trust. So, what is the minimum amount of a stake that a sponsor should hold in Innovate? We have 5%, 10%, 15%, or 25%. This is important question. As you all know, this is an important question. So, the correct answer for this question is, everyone just please answer the question. So, the correct answer for this question is minimum. So here answer is okay. Kasudhan Singh B 10%. Okay. Balmukund Singh C. Shabana is saying C. Shrinu is saying C. Okay. Whoever is saying C is the correct answer. The minimum amount that a sponsor should hold in InvIT is 15%. So the correct answer for this question is C. 15% is the correct answer. Clear? C is the correct answer. Done? Good. Next question, sponsor to hold not less than dash of the total unit of the investment trust after initial offer in REIT. So this is again a question regarding with the percentage. So sponsor shouldn't hold less than what of total unit in investment trust after initial offer in REIT. So in InvIT, I have said it is 15%. A sponsor should hold in InvIT 15%, a minimum of 15%. But in REITs, the sponsor should hold how much percent? In REITs, the sponsor should hold how much percent? So, see, in REITs, real estate infrastructure trust, or you can say real estate investment trust, here the sponsor should hold not less than 25% of their total investment after the initial public offering. Clear? So you all know that REITs are regulated by whom? They are governed by SEBI, Securities and Exchange Board of India. Clear? Done? Yes, A is the correct answer. See, these are important questions. Why these are important questions? Because these are one word question. You will get these type of question in your exam. Okay? Done? Yes or no? Just please keep on liking and sharing the video. Everyone, whoever is in the class, just please, I request you to keep liking and sharing the video to the maximum you can. Okay? Done? Good. Next question is what? Next question is the process by which a stock exchange transition from a mutually owned entity. See, a stock exchange transition from a mutually owned entity to a shareholder company is known as dematerialization, demutualization, demonetization, or monetization. So the correct answer for this question is very easy. You can all answer this question. You can all answer this question. See, I have to ask you that which by which process or which of the following process is known as when a shareholder or when a stock exchange transit itself from a mutually owned entity to a shareholder company. So this transition process actually known as demutualization, because dematerialization is what? Storing your stock in the electronic form. Demat account, as you all know, you all are bankers, you are dealing with the dematerialization in your daily life. Dematerialization is storing your stock in electronic form. Demutualization is known as the transition process from which a stock exchange transit itself from a mutually owned entity to a shareholder owned company. So the correct answer for this question is B. Clear? Yes, B is the correct answer. Next question. Which of the following capital are issued in the primary market? Now, which of the following capital are issued in the primary market? Initial public offering, FPOs, okay, equities, or bonus share. FPOs is future public offering. IPO, FPO, equity, or bonus share. So the correct answer for this question is, everyone can answer this question. Everyone can answer this question. See, I have asked you which of the following capital are issued in the primary market segment. See, financial market, uh, has different segment, and in financial market there is a capital market, and capital market has two segment. First is known as the primary segment, and the other one is known as the secondary segment, primary or secondary segment. So now you have to answer the correct question. Which of the following capital are issued in the primary market? It is initial public offering, it is future public offering, it is equity, or it is bonus share. So the correct answer for this question is, please everyone answer this question. Okay, see, initial public offering and future public offering, these are the primary segment market conditions. Okay, now equity and bonus share, these are dealt in the secondary market. Okay, initial public offering, you all know, if new company want to raise funding from the investor, or it want to raise investment from the public, then they offer the initial public offering in the primary segment. Future public offering is also a follow up on the initial public offering, or follow up public offering. You also say that follow up public offering. So FPO is that whenever an already listed company want to issue, want to raise new investment from the public, then they are that they use the FPO thing, and FPO is also done in the primary market. So these are the primary market segment, and these are dealt in the secondary market. So the correct answer for this question is 1 and 2. Clear? Yes or no, everyone? Just please answer the question. Please answer the question, everyone, guys. Done? Clear? Any doubt? If you have any doubt, you can ask. If you have any doubt, please ask. Done? Good. Next question is what? Choose the correct statement. Now you have to choose the correct statement. Equity shareholders do not have any voting right, while preference shareholders have the voting right. Equity shareholders have the right to participate in the management decision, while preference shareholders don't have this right. One only, second only, both 1 and 2, or neither 1 nor 2. So the correct answer for this question is everyone. So you have to choose the correct statement here. I have listed two statements regarding the difference between the preference share and the equity share. Now you have to check the correct answer. So the correct answer for this question is C, equity shareholder and preference shareholder. The first statement says that equity shareholder do not have any voting right. That is wrong. Equity shareholder actually have the voting right, while preference shareholder don't have any voting right. So first is the wrong statement. Second statement says that equity shareholder have the right to participate in the management decision, while the preference shareholder don't have this right. Correct. Why? Because if equity shareholder have the right to vote, they have the ownership of the company, they have the right to participate in the management decision, and these are something which the preference shareholder doesn't enjoy. But if we talk about preference shareholders are paid a fixed percentage of the income, which equity shareholder doesn't enjoy. Preference shareholders are always get preference in comparison to the equity shareholder. So the correct answer for this question is B. Second only, B is the correct answer. Clear? Done? Yes or no? Clear? Good. Good. Next question. What is the important parameter for any bond? What are the important parameter for any bond? Face value, maturity, coupon, interest rate, or all of the above? What are the important parameters for any bond? Bond are what? Bond are the fixed income instrument. You can say bond are what? They are the fixed income instrument, because the bond holders are paid on a fixed interest by to the debt holder. So the bonds traditionally pay a fixed amount of interest to the bond holder, and that's why they are termed as the fixed instrument, fixed income instruments. So they are used by companies and municipalities and states to raise or to finance their different type of project. And the difference is the bond always yield a fixed income because all those debt holders are paid on a fixed interest basis. Okay, so what is important in a bond? Yes, face value, maturity, interest rate. These all are very important for the bond, for defining the bond. So D is the correct answer. Clear? So on which date it is maturing, what is the amount of the bond, and what is the fixed coupon or interest rate which a debt holder can receive or a bond holder can receive. These all are the things which they are looking in any type of bond. Clear? Okay. Next question. Which is the self-regulatory organization associated with fixed income and derivative markets in India? So, regulatory authority for fixed income and derivative market in India. So, the correct answer is SEBI, SEBI, RBI, or FIMDA. So, the correct answer for this question is 15th. Question number 15 answer is, everyone, question number 15 answer is, what is the self-regulatory organization that is associated with fixed income and derivative markets in India? So the correct answer for this question is yes. D is the correct answer, but you have to tell the full form of D also. So you have to tell the full form of D also. See, you have to check the full form of FIMDA. Everyone in the comment section, just tell me the full form of FIMDA. So the correct answer for this question is self-regulatory organization that are associated with fixed income and derivative market in India. So the correct answer for this question is, FIMDA. And what is the full form of FIMDA? As you all know, it is Fixed Income Money Market and Derivatives Association of India. FIMDA, Fixed Income Derivative Market and Association of India. FIMDA is the correct answer. Clear? Done? Everyone? Good. Next question is what? Which of the following best describe the term spot price in the financial market? What is a spot price in the financial market? The price of the financial instrument for delivery in the future, the price at which financial instrument is sold short, the current market price of a financial instrument for immediate delivery and settlement, the average price for a financial instrument over a specific period of time. You have to check which of the following best describe the spot price in the financial market. So the correct answer for this is spot price in the financial market. What is this term means? So the correct answer for this question is spot price. So the term define itself. If you just observe the statements clearly and you observe the word clearly, that is spot price, you will know what is a spot price. A spot price is simply when a buyer and a seller, what a buyer and a seller is evaluating assets right now in the current condition, that is known as a spot price. Means it is market price in which the commodity or the currency can be sold or bought immediately for the settlement and delivery. So this is known as the spot price. So it is the current market price of financial market for immediate delivery and settlement. Yes, of course, everyone C is the correct answer. Yes, everyone C is the correct answer. Clear? Done? Yes. Next question. Choose the correct statement. Now, it is a very important question. This is regarding FERA and FEMA. There are two acts. One is the replacement of another. So, FEMA, Foreign Exchange Management Act, and FERA, Foreign Exchange Regulation Act. Now you have to choose the correct statement regarding these two. First, Foreign Exchange Regulation Act was enacted to replace FEMA effective from 1st June 2000. The act empower RBI to make rules and regulation to carry out the provision of Act Third, under the FEMA, all transactions involving foreign exchange has been classified either on the capital or current account transaction. So the correct answer for this question is, everyone just please answer the question. You can all answer this question easily. Everyone just please answer the question. I know you can answer this question easily. Nagarjuna, Balmukund, Ralapalli, Shrinu, Araina, just please answer the question. 17C. Okay, so Priya is saying C. Okay, means second and third is correct, means first and second is wrong. So if I asked why first and second is wrong, see, Foreign Exchange Management Act actually, currently which act is active right now? It is Foreign Exchange Management Act. So Foreign Exchange Management Act was enacted to replace FERA, Foreign Exchange Regulation Act. See, earlier there was a Regulation Act, but that act was more of a conservative act that doesn't allow liberalization, that promotes the restriction in foreign exchange management. And that's why from that time, or from that point of view, FERA was good from the initial days. But after the liberalization, privatization and globalization has been done, now we want the act which actually enables or promote the foreign exchange. And that's why Foreign Exchange Management Act has been enacted to replace FEMA. FERA. Okay, so FEMA actually is currently active and FERA is replaced by FEMA. So first is wrong. Second statement, yes, it is correct. Third statement is correct. So the correct answer for this question is C. See, under the FEMA, Foreign Exchange Management Act, transactions has been divided into two categories: capital or current account transaction. Current account transactions are those transactions in which there is no changes, there are no changes in the financial liabilities and assets, while in the what while in the capital account there is a change of financial liabilities and assets as well. Clear? Yes or no? Done or not? Everyone, yes or no? Done or not? Yes, good, good. Now, next question is again with the same FERA and FEMA. FERA was enacted to conserve the foreign exchange transaction, but FEMA focuses on enhancing India's foreign exchange reserve. Violation of FEMA were regarded as criminal offences, while violation of FERA were regarded as the civil offences. FERA has more flexible rules and regulation as compared to FEMA. Now you have to choose the correct statement. This is regarding the FERA and FEMA, and it is very important. Very important. So the correct answer for this question is, everyone, you can answer this question easily. Everyone, you can answer this question easily. You have to choose the correct statement, everyone. Guys, just please answer it. Okay, see, FERA was enacted to conserve the foreign exchange reserve. Yes, because we were at the minimum of our foreign exchange reserve. So FERA was formed at that time to just conserve that foreign exchange reserve so that they cannot flow outside the country. But FEMA was enacted actually to flourish the foreign exchange reserve, or you can say to enhance the foreign exchange reserve. So first statement is perfectly correct. Now, second statement says that violation of FEMA were regarded as criminal offences. No, actually FEMA is more of a liberal act, as you all know. So violation of any of the provisions under FEMA, actually it is regarded as a civil offence. So it is wrong because it is regarded as a civil offence. But violation of FERA were regarded as a criminal offences, because if at earlier time any rules of FERA were violated, you can be jailed or sent to imprisonment. But this is not in the case of FEMA, which is active right now. That's why violation of FEMA is what is a civil offense, but FERA, it was criminal offense. Okay. Next, FERA has more flexible rules and regulation compared to FEMA. Wrong. FERA has more restrictive rules and regulation as compared to FEMA. FEMA is more liberal. FEMA is more of FERA is more conservative, and FEMA is more liberal. Okay, so FEMA is more of a liberal thing. Is FERA, it was more of a conservative. Okay, so the correct answer is 1. Clear? Done? Yes or no? Yes or no? Done? Good. Next question. Now you have to choose the correct statement regarding the LIBOR. LIBOR, you all know. Sorry. LIBOR is London Interbank Offered Rate. London Interbank Offered Rate, or you can say LIBOR, was a very popular benchmark and was issued for US dollar, British pound, Canadian dollar, and Japanese yen only. Okay, now second says that the rate was being calculated and published each day by IMF. Third, it served in different maturities. Overnight, spot next means 1 week, or 1, 2, 3, 6, and 12 months. So the correct answer for this is. So the correct answer for this is, everyone just please answer this question. So the correct answer for this is, just please like and share the video, guys. Everyone, whoever is in the class, I request you to please like and share the video. I request you all to please like and share the video. Done? Okay, see, first thing is what? LIBOR, London Interbank Offered Rate. So LIBOR is a benchmark interest rate. Let me explain you first what is LIBOR. LIBOR is a benchmark interest rate in which the global major banks lend to different segments or different institution in the international market. So the base rate or the benchmark rate which acts as a base for lending in the international market is LIBOR, London Interbank Offered Rate. And London Interbank Offered Rate are computed on the basis of franc. First of all, franc, euro, pound, Japanese yen, and dollar. So these are the 5 currencies on the basis of which LIBOR is calculated. Again, I'm telling you, it is franc, it is euro, it is pound, it is yen, and it is dollar. See, there are 5 basket currencies. 5 basket currencies has a renminbi in it. Here, there is 4 basket currencies, means euro, pound, dollar, and yen. And fifth one is franc, because renminbi, which is the Chinese currency, it is not included in the calculation of LIBOR. So for replacement of what? Replacement of that renminbi is with the franc. So first is the wrong answer, because dollar is there, pound is there, but Canadian dollar is not there. Okay. Next, the rate is being calculated and published by IMF in each day. It is wrong. It is by the ICE Benchmark Administration, means IBA. It was calculated by whom? It was calculated each day by IBA, that is ICE Benchmark Association. Clear? Okay, third, it is offered in different maturities. Yes, it is offered in different maturities. That is overnight, 1 week, 1, 2, 3, 6, and 12 months. So third is the correct answer. So third only is the correct answer. Means A is the correct answer. Done? Clear? Yes or no, everyone? Done? Good. Next question is what? See, what is the minimum capital requirement for a merchant banker? Now you have to select the minimum capital requirement for a merchant banker. 10 crore, 5 crore, 50 lakh or 10 lakh. 10 crore, 5 crore, 50 lakh or 10 lakh. Okay. What is the minimum capital requirement for a merchant banker? Minimum capital requirement for a merchant banker. Everyone, what is the minimum capital requirement for a merchant banker? Everyone, please answer the question. Minimum capital requirement for a merchant banker, 10 crore, 5 crore, 50 lakh or 10 lakh. Yes, please, the correct answer 5 crore. For a merchant banker, if you want to enter the merchant banker stream, you have should have a minimum capital requirement of 5 crore. Yes, good. Next question. The commodities fund primarily invest in what? Equities of FMCG companies, debt instrument, physical commodities or commodity future or real estate projects. So the correct answer for this question is everyone. So the correct answer for this question is So the correct answer for this question is everyone please answer this question. Commodity fund primarily invest in what? Equities of FMCG companies, debt instrument, physical commodities or commodity future or real estate project. So you all know for real estate project the commodity fund market doesn't invest in that. It invests in basically physical commodities or commodity future. So C is the correct answer. Clear? C is the correct answer. Done? Yes. Cool. Good. Next is what? Who regulates the commodity derivative market in India? Who regulate the commodity derivative market in India? That is RBI, SEBI, IRDA or none. Reserve Bank of India, Securities and Exchange Board of India, Insurance Regulatory and Development Authority or none of the above. Derivative market in India. So the correct answer for this question is derivative market. Yes, they are regulated by SEBI. Okay, so clearly remember this. Okay, do not confuse it with RBI. Regulatory Development Authority. Sorry. The derivative market in India was regulated or is regulated by SEBI, Securities and Exchange Board of India. Clear? Okay, done. Next question is what? See, derivative trading commenced in India in June 2000 after SEBI granted the final approval to this effect in May 2001. Based on the recommendation of which committee? Malhotra Committee, LC Gupta Committee, Lal Committee or NC Roy Committee? So the correct answer for this question is, again, it is important again because committee is always important. Committee is always important. Derivative trading commenced in India in June 2000 after SEBI granted the final approval to this effect. Based on the recommendation of whom? Malhotra Committee, LC Gupta Committee, Lal Committee or NC Roy Committee. So the correct answer for this question is everyone. Okay, so the correct answer for this question is yes, LC Gupta Committee is the correct answer. This is very important. So, by the recommendation of LC Gupta Committee, derivative trading commenced in India. This is very important. You have to remember this. This is very important. You have to remember this. That is LC Gupta Committee. Clear? Done? Next question. Which of the following statement is incorrect? Now you have to choose the incorrect statement. First, finance for new project is riskier. Venture capitalist finance established project. Venture capital is a long-term investment or venture capital steps in where the probability of the failure is high. So you have to choose the incorrect statement here. Now you have to choose the incorrect statement here. Now you have to choose the incorrect statement here. Everyone, just please answer this question. Everyone, you have to choose the correct statement. Okay, see, what is venture capital? Venture capitals are the capital which are used for financing the initial stages of a startup. Okay, so these doesn't actually what sponsor the established projects. These are for the initial stages of the startup. So startup at the very initial stage can fund themselves by the way of venture capitalists. So the correct answer for this question is C, because B is the wrong statement. Okay, done. Which of the following statement is incorrect? That is B. Finance new project is riskier. Yes, it is correct statement. Venture capital is a long-term instrument. Your investment, yes. Venture capitalists step in when the probability of the failure is high. Okay, done. Good guys. Good going. Okay, next question is what? See, in India, CRA are regulated by the credit rating agencies. In India, credit rating agencies are regulated by whom? In India, credit rating agencies, sorry. In India, credit rating agencies are regulated by whom? SEBI, RBI, both A and B, or Nabard. So the correct answer for this question is in India, credit rating agencies. Yes, 25th. RBI, not RBI. Credit rating agencies are regulated by Securities and Exchange Board of India. Credit rating agencies, they provide rating to the different companies on the basis of their balance sheet or records or something. So credit rating agencies, they are regulated by who? They are regulated by SEBI. Next question. CRA needs to have a minimum net worth of what? Credit rating agency. If you want to start a credit rating agency, you need to have a minimum net worth of how much? Minimum net worth of how much? So the correct answer is everyone. Yes. Okay. So CRA should have a minimum net worth of rupees 5 crore. Okay. So the last question of this class is, under the Prime Minister Suraksha Bima Yojana, what is the risk coverage amount provided for accidental death or full disability during an accident? So, for accidental death and full-time disability, the amount which are given as a risk coverage under the Prime Minister Suraksha Bima Yojana is what? 1 lakh, 5 lakh, 2 lakh, or 10 lakh. So, the correct answer is, yes, so risk coverage for accidental death and full-time disability is rupees 2 lakh, and for partial disability it is 1 lakh. Okay, done. So, this is it for today. I hope that you have all enjoyed this session. I have covered the most important questions regarding to the module D of the class. I hope you have all enjoyed this session. Please keep liking and sharing the video to the maximum you can. And if you haven't subscribed this channel yet, please subscribe the channel and press the bell notification icon so that you can receive the notification of each and every class before the starting. I wish you all the best for your IEIFS exam. I have covered module A, module B, module C, module D, and I hope that you will succeed in your exam IEIFS. I wish you a very, very best of luck to all of you guys. Okay. Thank you so much, guys, for joining this session. Thank you so much, and a very, very best of luck for all of you. Okay, then I will be starting the PBB marathon session soon before the exam because exam is scheduled on 16th. So I will be taking marathon on 14th and 15th, and that is the marathon from all the modules A, B, C, and D. So the final marathon for PPB will be on 14th and 15th at 8 a.m. Okay, and for IEFS, I am completing, and I know that you will rock in the exam. Okay, Thank you so much. Thank you. Take care, everyone. Bye bye, guys. Take care, everyone. Bye bye. Take care, everyone. Bye, guys.